Alright, I'm not going to make you wait till the end of the video to reveal my shocking comments about Nvidia stock. So here it is. Nvidia stock is cheap. That's right. I'm saying Nvidia stock is cheap. Even though it's trading at a price per share of $872, I'm saying that it's cheap. So in the rest of the video, I'll explain why I say it's cheap. And it has to do with value, with what you're getting in return for the price that you're paying for Nvidia stock. So let's take a closer look at this leading AI company right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So I mentioned already that Nvidia stock price is $872 per share. It's actually down from the highs of around $980 a few days ago. So it's been a volatile stock. It's been mostly up for 2024 and for the previous 6 months. In fact, I've rated Nvidia stock as one of my top 24 stocks to buy in 2024, and I made that recommendation around December 30th. So it's up significantly since I made that recommendation. But here's why I'm saying Nvidia stock is not expensive, even though it's trading at a price of $872 per share. And it's because you're getting Nvidia stock at a forward price to earnings ratio of 29.94, which is not expensive for what you are getting in return in Nvidia stock, which is one of the leading AI companies in the world with a strong competitive advantage that it's arguably at least one step ahead of the competition, if not two or more steps ahead of the competition in terms of enabling artificial intelligence through its accelerating graphic processing units or GPUs. That's a good value. That's why I'm saying it's cheap. It's because what you're getting in return is so much that the price that you're paying is not expensive. Isn't that what you look for when you go shopping for anything? When you go to buy a car, you could buy a car for $20,000 or $80,000. Depending on what kind of car you're getting, an $80,000 car might be cheap, might be relatively cheap, because you might be getting a car that should be worth a lot more, but you're getting it for $80,000. So you could say it's cheap. It's relatively cheap compared to what you're getting in return. You could also go buying a soda, right? When you buy a soda from a supermarket, you might be able to get it for $2 for a 2-liter bottle. But if you buy a 20-ounce bottle of soda at a Disneyland park, you're paying over $5, right? So you're paying an expensive price when you're buying a $5 bottle of soda at Disneyland versus when you're buying it from the supermarket. So it's relatively speaking, when you're talking about expensive or cheap, when you're dealing with stocks in the market, depending on what you're getting in return. And with Nvidia, you're getting a lot in return. That's just the price to earnings ratio forward for 1 year. If we look longer term, Nvidia analysts that are following Nvidia stock, these are Wall Street analysts that are following Nvidia stock, they forecast that over the next 5 years, it's going to generate 36% growth per share in earnings per share. So 36% per year over the next 5 years in earnings per share growth. Now, what I usually say on my channel, if you've been following me for a while, when you're getting increase in earnings per share at a rate that's above the forward PE ratio, then that signals you're getting a good value. So you have 36% for earnings per share growth expected for the next 5 years, but you're getting Nvidia stock at a PE of 29.9 or 30. So you're getting 36% earnings per share increase per year at a forward PE of 29. And according to my investing framework, I consider that to be cheap. I consider that to be a good value when you're getting more earnings per share increase per year than you're paying in price to earnings per share. Now, that's the next 5 years. But for now, Nvidia's growth has been absolutely phenomenal. Take a look at these numbers. Revenue in its latest year increased by 126%. Its gross profit margin increased to 72.7% from 56.9%. For a company that sells mostly hardware in GPUs, that's a phenomenal gross profit margin. That's industry-leading gross profit margins. Operating expenses barely increased by 2%. So the company increased its revenue by 126%, while operating expenses increased by only 2%. That is so hard to do. If any of you watching are in business, you know how hard that is to accomplish, because when your revenues are growing, there are certain expenses that just automatically grow along with your sales. It's so hard to grow your sales by more than 125% and keep your operating expenses relatively flat. Operating income increased by 681% to 32.97 billion, up from 4.2 billion, and net income increased by 581% to 29.76 billion, up from 4.368 billion. This was just an incredible year for Nvidia, fueled by the insatiable demand to develop artificial intelligence capabilities by large enterprises, and now increasingly even medium-sized enterprises, and the demand for this service seems to be continuing onward. Nvidia is saying in its latest quarterly conference call that demand for its products far exceeds supply. Even after they grew revenue by 126% in the latest year, their revenue could have grown by even more if they had the supply to fulfill that demand. Management did say that they're ramping up supply and they will have more supply coming in over the next few quarters. That's why they're confident that their next quarter and their next year is also going to be better than 2024. So all these factors are working in Nvidia's favor. And even though the stock price is up by so much over the last 3 months and 6 months, you're getting so much more in return that the valuation, the forward price to earnings ratio, is not that bad. It's not relatively expensive. In fact, it's relatively cheap according to what you're getting with Nvidia, because you're getting so much in return in terms of revenue, profitability, cash flow from operations, and the competitive advantage from a company that's in an industry that's the hottest industry to be in. You have the leading company in the hottest industry that's growing revenues and profits and cash flows and trading at a forward price to earnings ratio of 29.9. That's actually cheaper than Costco stock, a brick and mortar retailer that sells groceries like milk and eggs and butter and things like that. Costco stock on a forward price to earnings ratio is more expensive than Nvidia. Think about that, right? So that's why I suggest that Nvidia stock is not expensive, that Nvidia stock is still a great value for investors. That's why I've placed Nvidia stock on my list of top 24 stocks to buy for 2024, and that's why I'm reiterating that recommendation in this video. Now, all that being said, Nvidia is going to be a volatile stock. It's going to move violently. The price is going to move sharply higher and sharply lower at times during the rest of this year and perhaps the rest of the next few years. It's a volatile stock. It's in a volatile industry. That's the characteristic of this business. So as an investor going into Nvidia stock, if you cannot handle the elevated risk, you shouldn't invest in Nvidia stock, right? Don't put money in Nvidia stock that you're going to need anytime in the next 5 years. If you're going to need that money, if the fluctuations in price is going to make you nervous or uneasy, then you shouldn't be putting that money into Nvidia stock because it is risky. All stocks are risky. Nvidia is especially risky. So even though you're getting a good value in Nvidia stock, even though I think the stock is relatively cheap, there's still an elevated risk associated with Nvidia stock. So you must incorporate that in your decision making when you're deciding whether or not to buy or hold Nvidia stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.